Cloudflare Inc., a San Francisco network infrastructure company securing, accelerating, and connecting internet traffic for over 200,000 paying customers across 100 countries.
Net generated $2.2 billion in an FY 2025 revenue at 76% non-GAAP gross margin. Network security, zero trust and CDN from a single global network for 200,000 customers.
The story begins in 2009. Matthew Prince, Michelle Zatlyn, and Lee Holloway co-founded Cloudflare after building a spam tracking tool. The company pivoted to website security and won TechCrunch Disrupt.
Cloudflare IPO'd on YSE in 2019 at $15. Its stock tripled in the first year. By 2022, it launched a SaaS platform combining SD-WAN, zero trust access, and cloud security under one control plane.
In 2024, Cloudflare launched Workers AI, inference running on its global network edge. In Q1 26, it announced a 20% restructuring to accelerate AI infrastructure.
Subscription revenue from network security, CDN, and connectivity services generates the vast majority of Cloudflare's income, sold on annual contracts that expand as customers activate additional product layers.
Zero Trust and SaaS, Cloudflare One, CASB, and Magic WAN are the fastest growing tier. Enterprise deals over $1 million in annual recurring revenue grew over 40% in FY 2025.
Gross margins reached 76% in FY 2025 on a non-GAAP basis. Operating income was $304 million on $2.2 billion in revenue, a 14% non-GAAP margin.
Revenue grew 30% to $2.2 billion in FY 2025, the fifth consecutive year of 30% plus growth. Q1 2026 continued with 34% revenue growth and a double beat.
Zscaler leads Zero Trust Network Access, a pure-play SaaS competitor with strong endpoint integration. Cloudflare's full-stack network lets it bundle security and CDN at lower total cost.
Palo Alto Networks is the largest enterprise security platform, deeper in endpoint and cloud-native detection. Cloudflare's Edge network positions it in connectivity and AI inference, where Palo Alto does not compete.
Cloudflare's moat is its global Anycast network, 300 cities, 200 countries, routing traffic through infrastructure competitors cannot replicate without years of capital investment.
Cloudflare's network spans over 300 cities in more than 100 countries, processing over 3 trillion DNS queries per day. It operates inside virtually every major internet exchange globally.
North America drives the majority of enterprise subscription revenue. Europe has strong financial services penetration. Asia-Pacific is the fastest-growing region as enterprise security budgets expand in Japan and South Korea.
Matthew Prince co-founded Cloudflare in 2009 with Michelle Zatlyn and Lee Holloway, and has served as CEO since day one, guiding Cloudflare from a website security tool to a global network infrastructure platform.
Prince's legal background, JD from Harvard, informs Cloudflare's government relationships, positioning the company as a trusted partner for national security-sensitive deployments across the U.S. and European Union.
Cloudflare, a global network infrastructure platform, $2.2 billion in FY 2025 revenue at 76% gross margin, with zero trust, AI inference, and developer tools as the compounding growth layers.
Q1 2026, a double beat, $640 million in revenue at 34% growth, ahead on both lines. The 20% restructuring and AI build-out are the story in the full episode.
Cloudflare reported Q1 2026 revenue of $639.8 million, up 33.5% year over year, beating estimates by nearly 3%. GAAP EPS missed at -7 cents versus the -5 cent estimate, but the entire miss is stock-based compensation, not cash burn. The AI gateway story is accelerating. I'm Hudson. This is Charged Alpha.
And I'm Lana. Cloudflare is a global edge network spanning 350 cities, sitting between the internet and enterprise applications to handle security, performance, and connectivity. The platform covers zero trust access, DDoS protection, DNS, CDN, and AI traffic management. At $83.4 billion in market cap, net trades at 32 times trailing sales, a multiple demanding sustained hypergrowth.
Matthew Prince co-founded Cloudflare in 2009. He remains CEO alongside co-founder Michelle Zatlyn as president, tight founder-operator alignment. The company went public in 2019 and has compounded revenue above 30% annually. Q1's 33.5% growth is not deceleration. It is consistency at a scale most enterprise software companies never reach.
Revenue of $639.8 million grew 33.5% year over year, beating the $621.9 million estimate by 2.9%. Five-quarter revenue trend: 479, 512, 562, 614, 640. Growth is consistent, not lumpy. The beat reflects broad-based platform expansion rather than a single deal close.
Gross profit was $455.6 million, a 71.2% margin. That is down from 75.9% a year ago. The compression reflects accelerated network capacity investment ahead of AI traffic demand. Bulls call it deliberate infrastructure spend. Bears call it a structural cost headwind. Which narrative holds depends on whether AI gateway revenue materializes to offset the spend.
GAAP operating loss was $62 million, a negative 9.7% margin. GAAP EPS of negative 7 cents missed the negative 5 cent estimate. The miss is almost entirely stock-based compensation and depreciation, not cash consumption. Non-GAAP operating income is positive. The GAAP income statement is structurally misleading for Cloudflare. Free cash flow is the operative metric.
Trailing 12-month free cash flow reached $520 million, a 14% FCF margin. Q1 operating cash flow was $158 million. The business is generating real cash. FCF yield on $83 billion of market cap is thin, but it is positive and growing, which confirms the business model is not structurally cash destructive despite persistent GAAP losses.
Balance sheet: $932 million in cash against $3.5 billion in long-term debt. Net debt of $2.6 billion. Current ratio is 1.4. The debt load funds aggressive global network build-out. It is the primary financial risk bears cite when questioning whether the growth story justifies the $83 billion market cap at this stage.
Forward guidance. Q2 revenue guided to $668 million, above prior street estimates. Full year 2026 consensus sits above $2.7 billion. FY 2027 consensus is $3.28 billion. GAAP profitability is expected in 2027 as SBC moderates and operating leverage compounds. That timeline anchors the long-duration bull case.
The AI gateway is the bull case's most compelling new catalyst. Every enterprise routing AI API calls, through OpenAI, Anthropic, or internal models, needs a security and observability layer. Cloudflare AI Gateway does exactly that: routing, logging, rate limiting, and caching calls across providers. Developer uptake is accelerating. If AI inference traffic compounds as web traffic did in the 2000s, Cloudflare's edge network becomes unavoidable infrastructure.
Zero trust is the second catalyst. Enterprises are replacing VPNs with zero trust access architectures. Cloudflare Access is a leading product here. Net revenue retention of approximately 112% proves customers expand usage over time. Large enterprise customers, those spending over $500,000 annually, grew 27% year over year. The highest value cohort is compounding at an accelerating rate.
Cloudflare Workers is the underpriced platform bet. Workers run serverless code at the edge, inside Cloudflare's network, not a centralized cloud region. For latency-sensitive apps and AI inference at the edge, this is a differentiated compute model. Developer adoption has accelerated since 2024. If Cloudflare captures even a fraction of compute spend today flowing to AWS Lambda or Google Cloud Run, the total addressable market expands materially beyond security.
Magic WAN and SaaS round out the bull case. Enterprises are consolidating network connectivity and security into a single platform. Cloudflare competes for full-stack enterprise contracts against Zscaler and Palo Alto with an architecture built for the software-defined era. Each SaaS win is a multi-million-dollar annual contract with high switching costs and multi-year renewal visibility. Exactly the type of revenue the street rewards with premium multiples.
The bear case starts with valuation. 32 times trailing sales requires flawless execution for years. The 95 forward PE assumes a profitability path that has slipped before. Any revenue deceleration, macro IT budget cuts, competitive displacement, or a large deal pushing into the next quarter could trigger multiple compression toward the 52-week low of $198.
Competition is intensifying. Microsoft has bundled Zero Trust into Entra ID inside enterprise agreements. Cloudflare cannot match on price. Zscaler and Palo Alto Networks are growing rapidly with established procurement relationships. Gap losses reflect Cloudflare spending aggressively to hold share against incumbents with deeper pockets. Bears ask, when does competitive pressure force a choice between growth and profitability?
The $3.5 billion in long-term debt is a structural concern. Negative ROE of 12% reflects years of growth investment. FCF is positive, but the debt service obligation limits capital allocation flexibility. If GAAP profitability slips past 2027, the leverage profile becomes a more material risk for investors pricing rate sensitivity into the equity.
The enterprise sales cycle is the most immediate near-term risk. Large Zero Trust and SaaS deals above $1 million annually require 6 to 12-month procurement cycles. A macro IT spending slowdown could push deals into subsequent quarters without any underlying business deterioration, making results inherently lumpy and hard to model at the top of the funnel.
The gross margin compression from 76 to 71% over 4 quarters is a watch point. Management attributes it to accelerated capacity build-out for AI traffic. If AI gateway revenue offsets the spend, margins recover. If AI traffic underwhelms, the compression becomes structural, pressuring the long-term unit economics of the business model and the valuation framework that justifies 32 times sales.
Options activity heading into Q1 showed moderate bullish positioning. Call buyers on the revenue beat, put buyers hedging GAAP EPS. Post-earnings, the reaction was muted. The market dismissed the SBC-driven EPS miss as non-cash noise and focused on the 33.5% revenue growth and upward Q2 guidance. Implied volatility compressed after results, a constructive signal.
Insider activity reflects founder conviction. CEO Matthew Prince and President Michelle Zatlyn hold large equity stakes without unusual pre-earnings selling. No concentrated insider sales were flagged before the Q1 report, a constructive signal relative to companies where executives lighten positions ahead of results. The founder-operator alignment narrative remains intact.
Wall Street reaction was broadly positive. 46 analysts cover Cloudflare, 15 strong buy, 22 buy, 8 hold, 1 sell. Consensus is strong buy. The average price target of $290 implies 12.5% upside. UBS upgraded from neutral to buy, citing the AI gateway as an underappreciated revenue vector prior models did not capture.
Morgan Stanley and Goldman maintained overweight and buy with targets in the 280 to 300 range. Piper Sandler reiterated overweight, highlighting that large enterprise growth of 27% demonstrates expanding within the most valuable cohort. The GAAP EPS miss was broadly dismissed as an SBC artifact. Analysts focused on non-GAAP operating metrics and AI gateway traction.
The 8 holds and 1 sell reflect analysts unconvinced the premium is justified. At 32 times trailing sales, Cloudflare must sustain 30+% growth through 2028 to be defensible under DCF models. This is a high-conviction name on both sides. Investors are rarely indifferent to Cloudflare. The AI gateway narrative is the swing variable that will determine who is right.
Cloudflare Q1 delivered the growth its premium requires. 33.5% revenue growth, a clean beat, upward guidance. GAAP EPS miss is SBC noise. The AI gateway catalyst is real and early. Watch gross margin in Q2 and Q3. Recovery there confirms the bull thesis.
Bottom line, hypergrowth compounder demanding valuation. Bull case is AI-era infrastructure justifying 32 times sales. Bear case is competition and margin pressure derate the multiple. Q1 reinforced the thesis. That is the charged alpha read on net. This episode is for educational and entertainment purposes only. Nothing discussed constitutes financial advice or a recommendation to buy or sell any security. Charged alpha may hold positions in companies discussed. Always do your own research and consult a qualified financial professional before making any investment decisions. Thanks for listening to Charged Alpha. New episodes every earnings season.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.